The market bores us to tears before dropping at the close. Should the bulls be worried? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that the bulls were above support, and as long as they were above support, we should expect a bullish outcome. The market chopped sideways before dropping down into support at the close and bouncing a little bit after the bell. Now, the question is, should the bulls be worried? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, very choppy market yesterday, pretty boring until the close. Let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. As you can see, we got the breakdown here. They gapped it up overnight and then kind of crapped it out during the day, taking it down, breaking Monday's lows, which is a significant development. And just in the short term, you know, they still have plenty of support up here, but generally for the week, you don't want to see them breaking Monday's lows here. You want to see them hold and push higher. But they still are well within their support area of 52.55 to 52.71 that we outlined yesterday. They did hold that area and start to bounce back up toward the trend line here. So we'll see if tomorrow the bulls can buckle in and get ready to start to push us higher, and if that was indeed the conclusion of this wave 4. If they break below 52.55, that would be a small crack in the armor for the bulls. It's not the end of the world. We could still see them produce a couple of options to the upside where wave 3 here, this bracketed wave 3 would move up to where the regular wave 3 of 5 is. And then you would have wave 4 coming down and then wave 5 higher. This would not necessarily be a desired outcome just based on the overall length of the waves. It would not be something that you really want to see. The other option is this could be a much bigger A, B, C for 5. Again, not a desired outcome. This 42.55 area is not the end of support. It's certainly not the end of where we can go from here to the upside, but it is the first warning shot. You also have the 200 moving average coming in on the hourly right at that level. So it would be the first warning shot from the bears that there's potential trouble ahead. Now, once they break, or if, let's be more important, if they break 52.55, the next level of importance for the bears would be this B wave low here at 51.68, and then into and below this blue box. This takes out a lot of different diagonal options to the upside that would keep this bullish move alive and would tell us that the bears have fired their first major warning at the bulls that this is a potential bigger top. Overall, the biggest thing we want to see after we break the blue box, the next level to break would be the Fed lows from January, which are around the 5,000 level. Break down below that, and we can call this a major top in place, and we would be looking for much more downside from there. So from where we are right now, the key level is 52.55 to the downside. Assuming they hold that, things are adding up as usual, and we would expect continuation up toward that 53.50 to 5,400 area. Break 52.55, then we start to look at this B wave low here at 51.67, and then the blue box below that. Over on the NASDAQ, okay, so on the NASDAQ, they did not break Monday's lows here. They did not get down below that just yet. If they do come down and break that low, they need to hold that 18,383 area, which is just slightly below Monday's low. So I don't necessarily think if they break Monday's low, they're going to quickly bounce off of that level. It certainly is possible, but not something I'm really banking on. So they still are holding on to this 1-2 type of setup here for this move up, but it is not an ideal look right now for the NASDAQ. But as long as they're above this low, then we can still push directly higher. Now, if they break their 18,383, it's a little bit different than the ES. If you remember last week, I talked about this A-leg high being a little bit low. I would have liked to have seen a BC that took it up into about this area here. They actually extended, so it would not be impossible that this was the A leg and then the B leg coming and then C of 5 up to finish up around 19,000. That would be very plausible given the overall structures that we're looking at should they break to the downside. If that's the case, they need to hold that 18,209 level. If they can hold 18,209 here, there's a lot of support across this area. Hold that and push up, and we can see a C wave back up toward the 19,000 area. If, however, they cannot hold 18,383 and then 18,209, the blue box becomes important as they have tested it twice and bounced out of there. That key resistance, or key support has proven to be just that. They've bounced out of there twice. If they come back down and break through that box, that would be a huge warning to the bulls. And then, of course, a break of the major lows over here from the Fed at around 17,475 would be where we kind of call the top in, and we're looking for much more downside to come from there. So if we're going to see downside, generally because we're in an ending diagonal, you would want to see some acceleration to the downside. So if they start to accelerate and break support directly, that's more what we'd be looking for an actual move to the downside to break through. So you wouldn't want to see them coming down, break 18,383 and then kind of meander down here like this into 17,209 and then, kind of bounce off that trend line, because that's going to be bullish. You're going to want to see an ending diagonal end, and when that happens, you're going to push right through these support levels pretty directly. That's not to say you won't get a little bounce, but you're not going to sit here and grind on this for a while and then do this, generally. You'd look for a pretty accelerated move to the downside. So if we're going to see a move down on both charts, you would want to see some pretty steep and strong selling to signify the end of an ending diagonal. Otherwise, any kind of meandering to the downside will likely lead us to hold support and push higher off of those levels. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible membership plans that both come with a 7-day free trial. It's because I want you to get in there. I want you to become part of our trading team, understand what's going on, interact with us, see what we do. Make sure you love it before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking these out. We also have our education material. We're just about done with our advanced Elliott Wave course. Here you can see part of the double threes video. We have our introduction, advanced fib levels, diagonals, double and triple threes, flats, triangles, all the different stuff that the advanced Elliott Wave goes through, the complex patterns that we're working through now, like these ending diagonals, the stuff that's very tough to figure out, very tough to understand, and very tough to trade. We go through all of those different things and explain them in a way that we hope makes sense. Now, as you can see on our screen, people are loving this course, but if it's a little bit too advanced because you're just getting into Elliott Wave, no problem. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money by finally understanding the market in a way that makes sense. It can be very confusing when good news makes the market go down and bad news makes the market go up, and this is because Elliott knew that the news cycles were garbage and didn't matter anyway. He knew that key levels did, and he knew what happened when those key levels held and when they broke. This is a huge advantage over the rest of the market. This course is 25 videos in 3 parts. The introduction, where we go over your mindset and emotion, your expectation, the KISS method and why it works. The chart setup, which is every tool you need to use with Elliott Wave Theory, as well as how to use it and why we use it. And then the Elliott Wave for Beginners area, where we go through each of the waves. We show how to measure them, how they work, what their levels are, how to use them to trade, what they look like, everything you want to know so that you can understand the market in a way that makes sense. Now, here's the really cool part. Both the advanced and the beginners course come for free when you become a monthly member. You get them automatically. You don't have to pay for them. So if you don't want to pay this $67, you can become a monthly member, get all of our trades, all of our updates, and everything else, as well as the training material we just went through. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as all of the training material you just saw. We trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. Now, if you're looking for individual stocks, futures trading, advanced training, and income trading, you need to check out PT's throne room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income trading, guys. It's so good. He's killing the market with it. And his advanced training, his reduced risk binary method, absolutely crushes it. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures those trades that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also put together a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, key takeaways for today. The bulls are holding on to support. 52.55 is that first major level. A break of that level, and there's a little bit of cracks in the foundation. Nothing crazy just yet. The next level we'd want to see break would be 51.67 down here, this B wave low, and then the blue box. But assuming they can hold support, we would look for them to press higher up toward the 53.50 area next. Over on the NASDAQ, same situation. They have held support. As long as they're over that 18,383 level, we would look for them to push directly higher. However, if they break through that, they need to hold 18,209 and then bounce higher, looking for 18,850 to 18,900 after that. If 18,209 breaks, we would look for a test of the blue box. And if they break down through the blue box, that is a major warning for the bulls. Guys, that is your market update for today. I will talk to you tomorrow.